The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host. The koala bear of Wall Street, just out there eating my little eucalyptus leaves, bothering nobody, and trying to keep up with a market that's already in progress on most of the station. Anyway, as we look at the S&P out here, not a big surprise. We're off about 5 points, kind of down at the very low end of this range, but certainly if you were expecting a lot of volume to come in, certainly not yet today. 1.7 billion shares as we start the show, and again, that's not a great deal of volume as we do this. The rest of the things, there's a few stocks moving. We'll get into it, but mostly in the NASDAQ is where we're seeing the weakness today, off 60 points, and there are a variety of reasons around that, but you've got Tesla's, it's off 28 bucks. It had been weak, and who knows, maybe they went short, but a bunch of Wall Streeters wrote some big articles, got it in Barron's over the weekend, and basically what I've been saying for the last 9 months in Tesla, they regurgitated, and it's off 10%. And why it was weak, I suspect you're going to have one more opportunity. It's still got a huge amounts of shorts. What you would love to see is this thing rally a little bit more, and, well, take a look at the charts later in the show, but I think you're going to have an opportunity on that thing, and I think it's going to be a big one, and I think it's probably going to be after expiration. You're probably looking for a bunch of dip buyers to come in here and run out the shorts that kind of ran out of patience, but still had, what, a 28% short interest on this thing in the last reporting cycle. That may have gone down, but some other things going on here, but when we look at that, we look at Apple, it's basically flat 101.66. Intel's off 2 cents. Microsoft's off 50 cents. We really just don't have as much as you'd like to see out here and follow through, but mostly the NASDAQ, and we'll get into that in a bit. Again, not a lot of volume, so we are going to kind of go on with the news here. I don't think that anything's massively changed. Of course, we're waiting for the Fed at 12:15 on Wednesday. We've got the Alibaba IPO, which will price on Thursday night, come out on Friday, and we also have the Scottish independence. You got to kill the gophers. You can't kill the gophers. Oh, I love that part of Caddyshack. Fuzzy little foreigner. Anyway, we've got a interesting day going on here, and as we look to history in this day, in 1960, President Dwight Eisenhower signs into law that Real Estate Investment Trust Act of 1960, which creates REITs. Actually, they'd been a thing before, but of course, a huge amount of what blew up the 1929 stock market was these REITs, and REITs in the utilities. And no one really, everybody thought that they were safe. But when we talk about REITs these days for commercial real estate and other things, the law that signed them into being happened this day in 1960, and a nice day. Of course, in 1890, the Baring Brothers of England, one of the huge investment banks at the time, had huge emerging market loans for Argentina and Chile, and guess what? They went bad. Argentina defaulting on its loans? I'm shocked. I'm shocked, I say. Did I say I'm shocked? I am shocked. Anyway, they went bad, of course, in 1890, and the Bank of England comes to its aid to bail them out. So every time we start thinking about 2000, 2008, 2007, 8 is something new, just remember financially there probably really isn't anything new under the sun. And why everybody says it's different this time, it's not different this time. 1890, 2007, 2008, not a lot changing out there. And but back then, it was only 28.5 million pounds. That would have been worth about $50 million at the time, worth of Bering's liability. Of course, Bering's still around, and thus was averted that would probably have been the greatest panic in the world's history. Of course, that would have been for about a year until 1929, Black Friday in 1987, the dot-com bust, the housing bust. I can go on and on. Anyway, there's nothing new under the sun, dear Horatio. Other things of interest out here. Got some email from some avid Apple enthusiasts over the weekend as being the official Apple critic here at TFNN. But just wanted to bring this up since someone said something to me about it. And I said, well, they said that Jobs said he wouldn't even build one. I said it's no different than in 1986 when he was in front, behind me in line telling everybody why they didn't need a color monitor for a Macintosh. He said the same thing in 2010. He said these big phones like Samsung are like Hummers. They're huge. They can't get your hand around it. No one's going to buy that. Of course, making one bigger than the big first Samsung phablet. And, of course, the phablet trend, official Apple skeptic, and just continue on. But I do want to remind everybody that probably nothing in the near future is going to change Apple. Probably going to be the darling of Wall Street. And it's not whether they sold 4 million phones in 24 hours on Friday or Saturday. It's not all the stuff that you're hearing now. What happens when Apple has upgraded everybody in the United States and they start trying to figure out how to sell these high-end phones to people in China, which is a little difficult because, of course, the Chinese more interested in show me selling a phone than they are. But it is different. And the question is going to be whether they're going to find a continuous source of new customers after they upgrade anybody. The question is not whether Apple can continue its business at the current revenue levels, but can it get any growth? Because it is at a high, it should be growing. It shouldn't just be stagnant, going sideways. Now, the Apple Watch, even the current CEO of Apple accidentally called the iWatch last week. But anyway, the Apple Watch, I'm wondering just how much they pumped this out. Back in 1988, Bill Gates showed the first version of Office at Comdex. He showed it himself. At that time, although no one knew it in the front, there were more than 3,000 blue screen of death bugs. What he did was show it to freeze the market. He said it was coming out in 3 months. It took over 2 years before it actually came out. But in the meantime, it was always coming out next month. It was always going to be a few weeks. It was always that. And in the meantime, they kept people from buying competitors' products. And when they did eventually ship, a lot of people have been waiting around. They were able to freeze the market for almost 2 years. This is an old idiom in the tech business, which is it's not so much important that we win as others lose. And I'm wondering if the whole iWatch thing is actually going to come out on time. When we actually review the video, we're going to the videotape, and look at the demonstration of the product, buy it over this weekend, I don't need to be the official Apple skeptic anymore. The tech people were starting to savage the iWatch this weekend and actually even getting into the issues that I discussed on Friday. But it took them pretty much into Saturday and Sunday to get over the Apple Teeny hangover that they had all week in a nerdgasm of the Apple rollout. But like I said, flat now, not up, not down. But the question is not now, but after the first of the year, what's going to happen on the iPhones and what the stock price is going to be all about. iPhone users. And certainly there's no model that shows that they're going to make a great deal of money off of payments. The idea of payments is to sell more phones. Yep, that was it. Net flows out of Britain hit $27 billion in August, the highest they've seen since the Lehman Brothers collapse in 2007. And, of course, this is all about the possibility of seeing the Scottish not take a sip of whiskey, no, resign from the United Kingdom. Of course, that's been about 220 years or 300 years. I think it's been 300 years. They've been kind of the United States of Great Britain. Just 5 of them, actually. But it is seeing a lot of money. And when we look at the strength of the dollar, what happens if they decide not to go through? Does all that cash go back into Britain? And do we see the pullback in the dollar? So this week is going to be big. I have no idea. The polls show basically a 50-50 split on whether Scotland is going to leave the UK. So just keep an eye on it. Of course, it is time to take the money and run. Loose monetary policies have created an illusion of permanent liquidity. And basically, we talked about this last month, but they are back at it again. The Bank for International Settlements out of Switzerland is saying that these markets are primed for huge problems. And I don't know if maybe they ratcheted up the discourse maybe another notch this weekend and why we're seeing a bit of weakness in the indexes out here. I would say probably, of course, we are watching a lot of liquidation in the highest floaters out there to raise cash to buy Alibaba this Friday. But on the dollar side, that's a whole different issue. And Claudio Barrio warned from the International Bank for International Settlements, markets will not be liquid when that liquidity is needed most. Claudio Barrio warned, urging sound prudential policies and extra prudence on the part of market participants themselves is necessary. And so we are getting the warnings. It's kind of like, there are icebergs out there, Mr. Titanic Captain. And, of course, the boss downstairs that owns the company says, we need to make the fastest run that's ever been made so everybody knows they should buy tickets on the Titanic. Of course, they only sold one set of tickets, or actually kept the cash on one set of tickets. And that was it. When we come back, a little bit more news, a little bit more discussion, a little bit more charts. It just doesn't get any better than that, does it? It is a beautiful day here in TFNN, the headquarters of technical trading and investing. Give me a call, 877-927-6648.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Just a little note from my experience when we were talking about Scotland. When I was up, our company was in Markham, Ontario, Canada, where the manufacturing, most everything was going on. I lived in Cincinnati, and we'd catch a little puddle jumper up to Toronto a couple times a month and have a meeting or two, and I'd fly back. And I'd wonder why things weren't going along the way they should. I'd lob a few things in there and then go back down to Cincy. But one of the things that happened was a great deal of the people, as we expanded, I started noticing that they came from Hong Kong. Well, of course, when China was taking over Hong Kong, a bunch of people fled. And about 4 or 5 years later, we started going up to the office and start noticing we had a bunch of new faces. Well, about half the people we had were from manufacturing electronics in Hong Kong. They went back. And they sold their houses at the lows, ended up buying at the highs 5 years later. So in Scotland, is this not the same thing? Is all the yelling and screaming about Scotland's financial problems really an opportunity to get in on the ground floor? Just a thought. But I witnessed it with the end of the world discussions in Hong Kong, only to see all those people go back eventually. And for the most part, China leaves them alone. Didn't know that to begin with, but at the same time, you don't know Scotland would have a bunch of problems. Maybe we should start on some haggis futures. Maybe that would be it. So that would be great. Question in the den. I once worked for Electronic Arts. No, I was working for a company that was distributing Electronic Arts software, a program called Deluxe Paint. If you Wikipedia it, you will see it. Written by Dan Silva. Probably the first, well, it was the first real paint box, not on like a $20,000 system, but on a $2,000 one. So everything when you draw on your computers today pretty much goes back to that Deluxe Paint program. And as we go. Comcast is the Hitler Youth. Just thought I would bring this up. Continue to call your senators and congressmen and say that you want net neutrality. Also tell them that you oppose the Time Warner-Comcast merger. I do it regularly, and I think they hate me by now. But Comcast has decided that Tor is illegal, and using it is against companies' policies. Now, if you don't know what Tor is, it's a way to anonymously surf the Internet. And, of course, if you anonymously surf the Internet, how can they track all your movements and then try to sell all that data to someone else? And I think that they protest just a little bit too much. Would you say that someone should be thrown in jail if they use Tor in Russia, where they can't get news and news is not flowing freely anymore? In fact, the NSA and the CIA has given money to the people developing Tor so that they can, in some countries where it's illegal to look at truth and light, do it. So all the little Hitler youth out there that work at Comcast, the evil ones, maybe they should be put in front of a tank and run over like Tiananmen Square. Anyway, my hatred for Comcast knows no bounds. Of course, California knows best. They've decided to make a law on just about everything. Ride-sharing startups Uber, Lyft, and Sidecar, all looking to go public in the next year, have seen some yellow cones and some giant yellow barrels in their way down the highways of life because the California Public Utilities Commission has sent a warning letters to all three companies that says it's illegal to charge individual fares for people traveling in one vehicle. This is all about ride sharing to things like work and everything like that. And of course they put a thing together where if you work real close and you've got real close hours, you can do it. And it is one of those things that is interesting. But they also had about 3 new laws on just about everything. Pretty soon California, of course, they passed the kill switch on cell phones. So we're all going to have kill switches on cell phones. And I'll be the one here telling you I told you so when all of our phones are turned off at once because these guys have cranial rectal inversions. We will be back with a half left in the show. In just a minute, give me a call, 877-927-6648.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And in my newsletter this morning, normally I reserve the trades for my readers, and I will continue to do that. What I do is sometimes take the commentary I have and voice it on this show. This morning I was talking about an asymmetrical triangle. And in the asymmetrical triangle, what you have is lower highs and then lower lows. In engineering, they call it a damped sine wave, and I'm showing it here from the Wikipedia page. But the important part is that the energy to go up and the energy to go down just slowly burns off. Now, a pattern I've talked about quite a few times is called the asymmetrical triangle. And so about by the number 1 here on the screen, if you put a big greater than sign on this thing, you would see that at one point you're going to get the highs and lows. And by about 3.5, you would reach the apex of the move. Now, the thought is if you can go somewhere between 2/3 to 3/4 of the way through a wave like that in a stock chart, that the first move will be about 75% of the time, will be a false move. Now, to raise your odds on that trade, what you look for is a sign of strength. It will bust out. You'll have all the volume. You'll have a big candle. And guess what? there's no follow-through in the next day or two, comes right back into the trading range, then it's time to go full tilt boogie to the other side. And normally, or what I'm looking for, is a breakout to the upside that fails after we get done with this. And why I think we can probably see these kinds of moves out here, what can you say, maybe till next Tuesday? I think we could be very close into these levels and not see a lot of movement. And, of course, I don't know if something's happened, but we're already back up to 1987 on the S&P cash, up a point and a half. What a surprise, 1.87 billion shares. So this is a point where a lot of people get discouraged in the stock market. You shouldn't. You should be willing to think about what else can I do? How can I improve my trading? There's a lot of things not to be able to do while we're waiting for this thing to resolve itself. And I'd say 98% of the time it resolves itself. Volatility is not something that the stock market or Wall Street can live without. We will have it, and we will have it again. So don't get too excited, but if you're looking at stock patterns, the one I believe we are in right now is just so many of the charts I looked at over the weekend were in this asymmetrical triangle as we continue to watch the energy come in and out of the market, each time less to the downside, each time less to the upside, and we go sideways. But I think we've got a good opportunity to go poke this high one more time, and at that point, maybe a sign of strength. Everybody will say we're going to the moon. You don't get follow through the next day. You can start pulling the trigger fairly hard. Got a request to look at CLF, and we'll look at that real quick. Cliffs Natural Resources. Certainly this is one that came in and tested its lows on lighter volume. That doesn't mean that we are over. One of the things I dislike about Cliffs is that the energy down was about the same as the energy up. When we look at the June 13th low at 1390, you had 9.9 million shares. Now, you went up to $18.41 on August 11th at 1841. You had 17 million shares. So you got to like that you got that high volume high. But that high volume high came on the 29th, was tested 7 days later on that high of August on just slightly more volume, which was 6 million shares. And that's why this thing failed up here at the top, just a couple pennies higher. So you've got a test of the top. It happened on lighter volume. You come back down here, you test the low on lighter volume. It did go below it. It didn't go below it yet. Still 4 cents shy. So two things. One, you could have a test of the top here on lighter volume. Energy did increase slightly on this way down. You didn't test the June 13th low out here, and I suspect that you get another test of that low. You get in it with about 3 million shares, time to take a look at it. But my guess is you get a test of that 1364 level, actually 1360 level, probably again. Nice volume out here. Could it get all the way up to 16 bucks? That would be the trade if I was trading this small, what Wyckoff called an automatic rally, one without a lot of preparation. You get a few of these going on this thing and the volume remains light out there, you probably have a good long-term low. We've got earnings this week. I thought I'd go through a few of the charts of stocks that are going to have earnings because we're going to have very light volume starting probably tomorrow about 2 o'clock and into the announcement at 12:15. If no big announcements happen then, we'll be waiting for the results of the election from Scotland on Thursday. And Friday, probably a good opportunity to see after the Alibaba IPO. I imagine probably a light expiration on Friday. Monday and Tuesday, we're going to have options rollover. And I think probably by then we're going to have a good indication whether this market's going much, much higher or we're going to see things like Tesla again. ConAgra up here, of course, testing its previous high. And there's no doubt about it. You've got to just say commodities have looked horrible, continue to look horrible. I didn't look at crude in the last few minutes. What do we have? Crude Crude's up 51 cents. I think it was up a lot stronger earlier this morning. We've got gold up $3. Gold certainly looks like $12.25. If it breaks $12.25, look for $11.80. So the question is, if Scotland decides to move, do we not even see even higher moves in the gold index? We're out here at $84.26. Remember, the weighting in that dollar index is hugely skewed to the euro and the pound. I think they account for more than half of it out of the 6. So be very wary when you're watching the dollar index out here, because it's really going to tell us a lot more than Asian currencies what Europe is telling us about the future of the dollar versus the euro and the pound. Probably more about the pound. Anyway, nice little lows out here. Of course, we've got, I think, ConAgra on Thursday morning. Don't know. But I think it's Thursday morning. Maybe Thursday night. I think it's Thursday morning. Anyway, keep an eye on this. This has done everything but shoot off Roman candles that it's topped out. It's come back and filled this gap with nothing, and it'd be interesting to see what they do on earnings. I am not going to play this ahead of earnings, though. Crackle Barrel, another earnings call this week, and like I said, I'm not expecting a lot of movement. Now, old Crackle Barrel, besides the home of blue-haired older folks on cross-country ventures to visit their grandkids, seems what's always in there when I'm there, and truck drivers. The old Cracker Barrel's kind of moving into that Smuckers territory where none of them are allowed within 50 miles of a town. Anyway, the old Cracker Barrel out here, this thing 3 times up here at this level, and not giving us a real clue out here what's happening at all. So I'm looking at $104 out here. Who knew that Cracker Barrel would be worth $104 a share? But certainly not a lot of volume out here. I suspect a lot of volatility in that one when we do get earnings on a triple top going into it. Cintas. Now, this thing has been off like a rocket since jobs have started to improve. Cintas makes uniforms, that kind of stuff. And what else can you say? This thing has gone up, and it had broken a trend line. And as long as employment continues to improve, kind of hard to vote against Cintas, although it may have overrun its earnings. FactSet, these guys do a lot of data for the stock market. This is another one that's just kind of continued up. It is starting to show some weakness, but on this last leg, really haven't had significant volume since June 17th. This would be one that I would take my money on right now if you had been long this thing. It made a nice spike out here, kind of tried it again on June 19th and has not stopped since, up to 129.75 on September 8th. But we will keep an eye on that. GIS, which is General Mills. Of course, with the commodity prices starting to kind of come back a little bit. And, of course, Andy, talking about Andy Heck, our guest here on Tuesdays and Thursdays at the 5 o'clock hour. Another one, though. This one kind of interesting in the fact that we've got much higher volumes out here, and I would be watching for this one for a breakout and a retest of that June 5th high. Energy is not really pulled back all that much, and if grain prices are really going to drop, and maybe sugar prices too, GIS looks very interesting for a test of the top, especially if the market starts pulling back and we go into the safety dance in safety trades. To IHS, and this is health services, isn't it? Let's go back here and look at the profile to make sure. There's so many stocks, so little time. This one's up here on light volume at $139. Critical information, insights, and analytics. It provides solutions for customer workflow, including strategy, planning, and analysis that offers information, research, and tools, which supports a range of commercial decisions and processes, compromising capital investments, country entry strategies, acquisitions, and annual strategic planning processes. Boy, This is a whole page of buzzwords. Change, challenges, health, safety, multinational. They got every buzzword in the world in this description. So we know what it is. It does everything, and yet it does nothing. IHS, what I'm looking at is the energy coming off the June 20th high out here. Pull back, fill the gap, which is exactly where you would have wanted to buy it. The standard Wyckoff model of buying the pullback at 131.03 on July 31st. But this energy on the way up did not really increase. You didn't really break the previous high of 139 with volume. It's kind of going sideways out here. This would be another one you wanted to watch for the downside since it broke that June 20th high on lighter volume. We're going to get another read this week also on housing. Lennar comes out this week. I think it's also after the bell on Thursday or Wednesday. In fact, I will look this one up because I think it's more interesting to the majority of us. Okay, September 17th. What is that? Monday, Tuesday. Oh, it's on Wednesday. And let's see if it's before market open. So this one's done and set up a perfect ABC if you wanted it. Energy is not all that bad, but you've got to really be worried about an expansion out here of an ABC because it doesn't get any plainer than this. That ABC would take you down to $32.75. We've seen a great deal of these housing builders start to warn, and it is going to be problematic if they don't come out with some decent earnings and even talk about maybe moving projections down for the next 6 to 9 months on the specter of higher interest rates out here. So that would be interesting nonetheless. $0.15 of a $100 purchase will go to the iPhone maker, according to 2 people familiar with the terms of the agreement. So not 1%, but 0.15% of it. Someone posted something in the den about the Apple Pay thing. I'll just diverge for 1 minute. You might want to also Google McDonald's, because in the drive-thru they've got this giant thing that kind of comes out of the mouth of the open window that kind of reminds me of the Alien, where it had the mouth inside the mouth and it sticks out and it goes to you so you can swipe your Apple thing inside your car. So the thing like kind of telescopes out at you so that you can do it. But very interesting technology. We'll see how well it works. But again, 15 cents or 15 cents out of $100 is not going to move Apple's needle at all. They're doing it to sell the iPhones themselves, in which case one iPhone sale, the profit off that would be worth probably someone buying, I don't know, 0.15%. I'll figure that out during the break. But don't think it will move the needle. Doesn't matter how much stuff you would buy. Selling something for $700 that cost you $210 to produce, that's margin. That's what moves Apple. That's what makes Apple the big Mac Daddy. We'll be back in a minute.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And as we are back, we are going to look at some stuff. I just need some house cleaning here, so hang on for a second. Okay, we're flat. 1985 on the S&P cash, still under 2 billion shares. We are in the last segment, the last furlong of the show. And I did want to tell you that there's something mighty interesting happening at TFNN. I actually am in the TFNN studios and not from my palatial estate broadcasting today because we are working on better technology to give you a much better signal, much better charts, and we'll be seeing those in the months to come. But one of the other things that's happening is a big deal here today at TFNN. We are offering you an opportunity to make a great deal of money with no risk. How often does that happen? And I'm not talking just a little bit of money. I'm talking about some big, big, big money. Could you buy a car? I don't know. Could you buy a motorcycle? Well, certainly. But we're talking about some big bucks. And you're going to have that opportunity. You need to be listening to the Tom O'Brien Show in the next hour as we launch this new thing that I can't talk about or I'd have to kill you. And so just hang on. But Tom will be warming this seat in approximately 8 minutes. And I don't know how long he will go along before he talks about it. Probably not long. So I would hang on to it and make sure that you get in on this, because it's probably one of the best deals ever. And this isn't giving you an ounce of silver. This is crossing your palms with many, many things of silver. And I'm not going to tell you how much. I'll let Tom bring it out. But you want to be listening in the next hour of the Tom O'Brien Show. So anyway, we're talking about Lennar in housing, and this has had, a couple little bounces out here. About 36 is the support area on this. But that's another one I'm going to be watching very closely. Oracle after the bell on Thursday, if I'm not mistaken. Now, this one certainly did just about everything you thought it should. Had a big gap down. It came back up to that gap with no volume. It's failed out here. And it probably could get back down to that 34 range on problems. I didn't really speak about it as much as we should. But right now, Microsoft is fighting a subpoena to give all kinds of documents in a foreign country, or from a foreign country, from one of its subsidiaries. If that holds true, in fact, they've gone so far to the wall as to say, okay, find us in contempt, but we're taking us to the Supreme Court if need be, and you can find us all the way there, but we're not going to give it up until we get the final declaration from the Supreme Court that this is legal. If this would stand, all U.S. laws apply to everybody over the entire world. That whether or not the laws would throw you in jail in your local country for giving the data away, if a U.S. judge says you've got to cough up the data, then that trumps any local law in any other country. I don't know how this could ever hold through the Supreme Court, but if it did, my guess, kiss all these big tech companies goodbye. If you want to know how the NASDAQ goes back to nothing, if this law continues, every cloud provider, they'd be out of business outside of anywhere but the United States. So keep an eye on that. Remember to sell when you can, not when you have to. We'll see you tomorrow at same bat channel, same bat time. And hang on for the Tom O'Brien Show.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.